welcome everybody to the Stay Strong webinar series extended version presented by the Hustle Firm. So we decided, thanks to all the great feedback that we've been getting, to keep this going for another 4 weeks. So thank you everybody for re-registering, and hopefully we can continue to provide some value. So we have myself, Dan Matteo, and John Rizzo, both partners here at RDG and Partners CPA firm. As always, we've got Shelby in the background holding down our technology. So all the Q&As, if you could put them in the Q&A section. If you see somebody else's question that's just like yours, just like theirs, that'll promote it to the top. If you have issues, just shoot a chat over to us and Shelby will take care of it. And then we'll be getting out the slides and a recording of today's presentation probably tomorrow morning. All right, John, you want to go over our agenda?
Yeah, so welcome everybody. Here's our agenda for today. So we're going to go through a news review. What's changed? A lot's changed. So yesterday, we didn't have too many changes. And then this morning we have a lot that's changed. So Dan's going to go through all that. We have a forgiveness example comparing now what an 8-week period would look like versus a 24-week period. So we'll show you the major differences there. And then we're answering Q&A as we go, but we also will have Q&A at the end like we always do. Thanks everyone again for attending. I know it's a nice day here in Rochester, so thanks for spending your time with us. Hope everyone's staying safe and healthy as we all get back to the office here slowly over the next few weeks, or some are already there, and we're getting closer and closer to restaurants opening. So all you restaurant owners out there, we're hoping that could go very smoothly for you when your time is when you're ready. And thanks to our research team, like I mentioned, this news just came out last night, so we've been working last night and into the morning trying to get this ready for everybody so we have the most up-to-date information. So thanks to our research team, we have Chris Gamble, managing partner here behind the scenes, answering questions with Tim Hearn, another partner and a director in our office, Ryan Lynn McCollum. I think DeJaco might be out golfing today, right? Golf day for Brian. We're giving him a little break, but we have team members stepping up on the research team. And a special thanks to Crescendo Design for helping us with our presentation.
Awesome. All right. So with that, we're going to go through the news review. And where we get our news from. Been following along on Twitter, so we got all the players here. Today we're really focusing on the big news that came out yesterday, on the flexibility. So we're going to tease that a little bit. So back on May 8th, it was noted that the PPP loan demand has kind of slowed because there was a lack of clear guidance on the 75% that could be used for payroll in the 8 weeks. And then, they kind of kept reminding everybody the Paycheck Protection Program was designed to protect workers, so they recognized that we needed more time for businesses to rehire. They recognized that some businesses weren't even open yet. So they started talking about flexibility. Marco Rubio really has been leading the charge on this with Mnuchin, and talking about how can they give us more flexibility, more time to spend this money. So then the Senate introduced a bill, and the first bill was changing the 8 weeks to 16 weeks. It was a group of bipartisan senators, so there was definitely some bipartisanship from the beginning on increasing this flexibility. In the midst of those discussions, the SBA and Treasury released the forgiveness application, which we went over last week. That was a treasure trove of guidance that they came out with, gave some flexibility. Some people would have seen about 10 weeks of payroll just through the additional relaxing of the rules, but they realized that they needed more than that. They needed more than just 8 weeks, more than 10 weeks. So they were hoping to fix that on May 17th. The House introduced it. The Senate also then passed that bill. So looks like we've got our extension. So with that, we'll kind of go into the legislation update. The legislation update on May 28th, HR, this House Resolution 7010 was passed, pretty bipartisan, 471 to 1. And then on June 3rd, last night, the Senate passed this bill in its current form, so it doesn't have to be ratified between the two committees. So now it heads to the president's desk where we anticipate that it'll be signed. So what's changed? What's this big news? This is big news for everybody. So what's changed? So in the bill, the old bill, we've got the old bill versus the new bill. So in the old one, you had 8 weeks for your covered period, 8 weeks to spend the money. In the new bill, you have 24. So that's huge. 3 times the number of weeks to spend the money. You still can use the 8 weeks. It's important to note that if you spent all your money and you did all this, you still have 8 weeks. You can follow all the rules and you can apply for forgiveness if you spent it. You don't have to though, you can use 24. The mix used to be 75% payroll, 25% non-payroll. It's very interesting to note on here, and this is a very important point, is that the max amount you could spend on payroll was 25%. There was no cap on you spending 100% of it on payroll. You just couldn't spend more than 25% of it on rent, utilities, and interest. In the new bill, with this legislation, it's 60-40, 60% payroll, 40% non-payroll. Interestingly, if you read between the lines, the 60% seems like a cliff. So before, you could spend any amount of money as long as 75% of it was on payroll, you'd get it forgiven, subject to those other tests. Now, you have to spend 60% of the loan amount on payroll. So we're still a little unclear on if it truly is this cliff, but we're fully anticipating you've got to spend 60% of your loan amount on payroll. So very important cliff there that wasn't there before. But you should have no problem doing it. You have 24 weeks to do that. Phase 4 of businesses open June 26th. So even some of our restaurant clients, the salons, which opened in phase 2, we're fully expecting there'll be an ability to spend the money and get most of it forgiven. The other big change was the loan term. So if you don't spend it all, if you don't meet the criteria to get it all forgiven, your loan term changes. Instead of 2 years, it's 5 years. So 5 years of a loan at 1%, which is not the end of the world. That's very cheap money. And rehire. So remember that if you bring everybody back, even if you only had half your FTEs back during the covered period, which is now 24 weeks, you had until June 30th to rehire everybody and get it all forgiven. Now you have until December to rehire everybody and get it all forgiven. And then this other thing that is somewhat PPP related is this payroll tax deferral. So I'll get into the nuances of that in a second. But before, under the old rule, if you got the PPP loan forgiven, you are no longer eligible for this payroll tax deferral. Under the new law, you are now eligible for the payroll tax deferral. So that's welcomed news for businesses. So what's this payroll tax deferral? The payroll tax deferral allows you to defer, not be forgiven. It's not a credit. You can just defer the employer portion of Social Security taxes, which is 6.2%, from now until the end of the year. So basically, you don't pay any employer payroll taxes for Social Security from now until the end of the year. Whatever you defer between now and the end of the year, you have to pay it back, 50% of it on December 31st, 2021, and you have to repay the second 50% of what you defer on December 31st, 2022. So our recommendation here is it's very important, unless you need this as from a cash flow perspective, it might be wise to just continue paying your payroll taxes and utilize the PPP. If you need this for cash flow, remember, this is a loan. It's an interest-free loan. You're going to have to pay it back. So don't get in trouble. Don't get caught because it's 2 big payments of deferred payroll taxes that are due in 2 years. So that's the payroll tax deferral that now everyone is eligible for that might not have been eligible before this. As a reminder, we've kind of said this from the beginning. This is why you do this. This is why we kind of have been harping on it. Make business decisions first. So if you don't need people, don't hire them back. If you need people, hire them back. So, John, you want to provide a little bit more color on that too, on more of the business decisions that people should be making?
Yeah, we talked about this. This has been in our presentation since the very beginning because, there is a lot of unknowns. As you can see, things change, and usually they change last minute. So we get a lot of questions about bonuses, for example. Should I be bonusing? And those that we've been helping with forgiveness applications, we looked at a lot of different bonus structures because the concern was that they wouldn't be able to spend all the money. Well, now that concern is alleviated with the extension to the 24 weeks. You can kind of tell from the latest news that Dan goes through of what direction this is all going in. So business decision first is what we always recommend, and hopefully you follow that all along and didn't do anything too erratic like hire family members or bonus individuals a little prematurely, and now you're finding out that you have 24 weeks. I do know a lot of people I've talked to today that ended unemployment a little early, for themselves or for some of their employees because they wanted to start to spend the money. Now they wish they hadn't done that because they have more time to pay their employees, and they could have left their employees on unemployment longer, or even themselves.
Yep. So again, good point there, John. Got to make business decisions first. So we've kind of always gone through, there's 3 forgiveness limitations that you want to make sure that you do to get everything forgiven. So we'll go through them real quick. Spend the money, maintain employment, and maintain compensation. So the first one, spend the money. We've updated these slides, so now it's at least 60% on payroll, 40% on rent, utilities, and interest. Again, a question that did just come up is, do we have to spend 60%? Can we only spend 60%? And so again, you have to spend at least 60%. You could spend all of it on payroll if you really wanted to or needed to. So it's flexible there. And now you have 24 weeks to spend all the money of the loan, which should be a lot easier to do. The second thing is maintaining employment. So you still have to calculate your base period, but there's been a lot of relaxation around how you get to the same number of FTEs before. So remember, if you offer somebody employment, a written offer of employment, and they decide not to come back, that doesn't count against you. If you fire someone for cause, that does not count against you. If you hire them all back by now December 31st, that does not count against you. So all good things on the maintain employment side. They really just want you to spend the money on payroll. That's the main point. Third thing here is maintaining compensation. So remember, employees must make at least 75% of their salary or hourly rate. So they don't have to make the same amount of money, but if you're paying them for an hour and they were $20 before, you have to pay them 75% of $20 again here. So important that you maintain their rate when you are bringing them back. A quick note on taxability. So we remember that in the CARES Act, the income was not taxable. Then the IRS came out and said, well, guess what? Now the expenses are not deductible. They came out with Notice 2020-32. So important point here is when you're doing tax planning that you want to factor this in currently. Now that doesn't mean that this won't change because the Senate has introduced a bill we really hope is going to pass that would make these expenses deductible. So this has not passed. It's only been introduced. It has not passed. It has not passed the House. It has not been signed into law, but we're really hoping that they do this by the end of the year. So there are a number of things that we are still waiting clarity on that we wanted to point out real quick. So we still need guidance on when do you start applying for forgiveness. So most of the banks we know have not opened up their process yet. The rules are still changing. So we don't even know that you can. But one important strategy point here that we've been talking about is once you've spent the money and you brought all your people back, you want to get it in as soon as you can so that you have certainty that it's been forgiven and you can move on. So it doesn't mean you need to wait until December or January or February. Once these rules come out, you'll want to get that application in once you've met the rules and spent the money and done that. So for everybody that can, get it in early. Really important point is that 8 weeks of $100,000 is $15,385. So that's the most amount you can pay an employee over the covered period. So when they extended it to 24, they haven't clarified if they're going to increase that to 24 weeks of $100,000 worth of compensation, which would be $46,000. So we're still waiting to see. Our interpretation and our assumption is that it's going to be increased and you're going to be able to pay your employees up that make about $100,000 a year or less. We also don't know if that applies to owners. So owners were previously allowed $15,385 or whatever they paid themselves in 2019. we assume that they would increase that so owners can get 24 weeks of their compensation or 2019 compensation. Same thing with Schedule Cs. So Schedule Cs were allowed 8 weeks worth of their 2019 profit. Hopefully now that means that they're allowed 24 weeks of their 2019 profit. The other thing is, if you remember, when you applied for a loan and you got the loan, you signed a loan document. So they increased the loan term to 5 years, but you signed a loan document that said you'll repay it over 2. So for all of those that can't spend the money, we imagine there's going to be some sort of amendment process or loan document update process that you'll go through with the bank. And then taxes, we touched on this. We don't know if expenses are deductible. And we also don't know if you don't apply for forgiveness by December 31st or January, and you want to go file your tax return, there's some planning to do around, are these expenses deductible if they haven't technically been forgiven? So a lot of tax planning that we're going to be continuing to monitor, especially when we're going through tax plans in Q3 with all of our clients. So we're still waiting on some clarity for a lot of things, but the overarching theme of today is that they just made this completely easier for businesses to spend the money as they continue to open. Real quick note here too, we just wanted to go over this now that we're going to be shifting gears from strategy on when to rehire and when to bonus. Now we're shifting gears to getting this application. So it's important that you document your FTEs, those people 40 hours and under, 40 hours and over. Get your payroll registers, your payroll tax filings, your state payroll tax filings, get those all in order. Make sure that you get the support for other costs, rent, utilities, and interest. So that would be lease agreements, invoices, canceled checks, payment receipts, account statements. Get this stuff in order now so that it's easy to do this application. And then you're going to remember, you've got to certify all this information. So it's important you know what you're doing. It's important that you're calculating this correctly so that you don't have any hiccups in the forgiveness process. All right, I'm going to kick it over to John. He's going to do a quick forgiveness example.
All right, great. Thanks, Dan. A couple of things to clarify on one of the biggest changes that I see that they've come out with is the 60% requirement for payroll, and the fact that there really isn't partial forgiveness anymore. So it shouldn't be very challenging to spend at least 60% on payroll, but if you don't spend 60%, that's a trap. You could end up with zero forgiveness. So you have to make sure you're at least hitting that 60% if you're choosing the 24-week period. Choosing the 8-week period and you're pretty much done with your loan, you've spent it all and met the requirements, then our recommendation would be file for forgiveness, complete the application with your bank, have your loan forgiven, and you're done. So that's why, like Dan mentioned, timing is important, and really just getting this completed would be great for you. All right, so let's look at an example. We're kind of comparing here the old rules, 8 weeks to the 24 weeks. This is an example that we've used in our webinars before, so it should look familiar to those that have been on these webinars. So in the 8-week period, we have a $2 million loan amount. The company spent $550,000 on payroll. They spent $390,000 on non-payroll, so they spent a total of $940,000. Based on the rules, the maximum non-payroll that they could receive forgiveness for is $183,000. So the total eligible for forgiveness would be that $183 plus the payroll spend of $550 for a total of $733. This company's FTEs during the base period were 180. During the covered period, whether they use the covered period or the alternative covered period, which allows you to use the next payroll that starts after your loan is funding, assuming that you're on either a weekly or bi-weekly payroll schedule. Under the covered period, they had 63 people, and that also includes the time period through June 30th that they had to add people. So they only retained 35% of their workforce in this 8-week period, plus the time up until June 30th. So when you do all the math, the total eligible for forgiveness was $733,000. You have to reduce that by the 65%, because they only retained 35%. So their debt forgiveness was $256,000 on a $2 million loan. So they weren't very successful in having, their loan forgiven in this example. So now let's take a look at 24 weeks and how this significantly changes. So loan amount, $2 million. Payroll over 24 weeks now at the same rate, it's $1,650,000 in payroll spent. Same thing with the non-payroll. Over 8 weeks, they spent $1,170,000 on non-payroll. So in total, they spent $2,820,000. They actually spent more money than their loan, which is fine. Their maximum non-payroll, which is 40%, would be $1.1 million. They spent $1,170,000. So they would have the $1.1 million there, and their total eligible would be $2,750,000, which would be the $1,650,000 for payroll plus the $1.1 million non-payroll. So their eligibility for forgiveness is actually more than their loan amount. So obviously their forgiveness would be limited to their loan amount. So in this case, they were able to get their employees to the baseline number of 180 because they had so much more time. They had 24 weeks and additional time up through December 31st. So they had 100% workforce retention. So their entire loan of $2 million would be forgiven. And the additional forgiveness they received compared to the 8-week period is over $1.7 million. So as you can see, this change is significant for everybody in ensuring that you can spend the money and have all of the money forgiven. So it's a major change that we're very excited will help all our business owners. Tracking information now. So what do we do from here? I saw a lot of questions come in about timing. Can we still use the 8 weeks? Yes, you can still use the 8 weeks. You can use a period. You know, if your forgiveness ends for you, or you can be fully forgiven before the 24-week period, then we recommend that's when you apply. However, you need to connect with your bank as to how they're going to be receiving these applications between the 8-week period and the 24-week period. My guess is they're still awaiting additional guidance at this time. Record keeping and tracking information is important. You are certifying all this information, so making sure that your payroll reports line up. This is probably the biggest piece of support that you're going to submit with your application, is making sure that you're providing source document information. So you need to connect with your payroll company to make sure you're getting 8-week reports and 24-week reports and all the reports that match up to the amount that end up on your loan application. If you need assistance there, RDG Payroll can help. Strategy. So like we talked about, don't forget to review your strategy. The strategy kind of changes now with these changes. The biggest piece of the strategy is the 60% rule. You have to make sure that you're spending 60% on payroll. So make good business decisions. Like we said, we mentioned that earlier, that is always number one. Keep good records. In this case, you have your lease agreements, you have your mortgage statements, you have your payroll reports, you have your normal books, whatever system you're using, but you need to keep good records. Any balance now, it's not the end of the world, right? If your loan, if any of your amount isn't forgiven, any balance that you don't spend is payable over 5 years at 1%. That's a really cheap loan. That's a big change, the 5-year change. We're expecting more guidance and relief. So we will continue to update that as we go through these webinars, and we also send emails in between the webinars. And if you need assistance with the application, this is where we're spending most of our time now, is helping our clients complete the 11-page application. That doesn't go away. Now, the rules are much more beneficial now for business owners than they were before, but that doesn't mean you don't have to submit your applications and have all the detail, and everything needs to tie out. You need to certify the information. So we offer our advisory services to help with any of your questions, along with actually assisting you with completing the forgiveness applications as your bank rolls them out.
All righty, so that's kind of today. So big news out was it's way easier to spend this money and get it forgiven. Doesn't mean that all of the nuances go away, but this is awesome, very welcome news for the business community, especially for our clients. We know we've been talking to a lot. So we've answered a ton of questions so far, but we'll kind of go through a couple of those right now.
Yeah, I have a question here. So there's a lot of talk about, okay, now that the loan's now that the forgiveness period is 24 weeks, the period to spend the money is 24 weeks, can we go back and apply for more money? And we've seen nothing that says you can. We're not expecting that you can. The original act that came out, was very specific in stating that you can only apply for this loan once. Now, I would recommend that you talk to your bank and see if there's a way that, let's say, for example, you applied for your loan and you didn't apply for enough money. Your calculations were off and your loan was $50,000. When you recalculate, you thought it could have been as much as $100,000. In that case, I don't believe you can go back and reapply. Once you apply, you've applied. Very specific, stating that you can't apply more than once for this loan. However, we did have a few clients that prior to their loan application being submitted, that their bank allowed them to amend it and adjust it. So, and there are still funds out there. There are still funds available for this program. So our recommendation is you talk to your bank there.
Yeah, one thing, a couple things on that is that, most of those things, like John said, are not, you can't amend the application. However, there is one specific one that's for partnerships. So general partners, if they didn't include their compensation as a general partner, they issued an interim final rule. Those people would be able to actually go in and get more money for the general partners. And then two, there's been chatter, which is not actual, it's not an actual bill that's been submitted, but it is, they are talking about if there's $100 billion left over, maybe making that available to certain groups of businesses. Very likely to be allowed for smaller businesses, but again, that's very, very in its infancy. So we'll monitor that, and obviously, if that becomes available, we'll be the first to let you guys know.
Here's a question: if we use over 60% for payroll but don't get back up to the FTEs, does everything turn into a loan, or is it still just a percentage? It is still just a percentage reduction because you've met the 60% requirement. So in that example, you would have partial loan forgiveness because you did not meet the FTE requirement. Like Dan just mentioned, the FTE requirement has come pretty loose now based on your business, your industry, and your ability to bring people back.
That's right. Yeah, and there's a ton of exceptions there if you don't. So very good point to keep good records and go from there. Another question here is the forgiveness reduction based on FTEs on 12/31/20, or is it weight reduction based on the number of FTEs over a 24-week period? So again, if you hire everybody back by December 31st, then this all goes away. You don't have to worry about the FTE calculation, except that you have to show that you hired everybody back. So there's some calculation. The point is, if you hire everybody back by December 31st, you can almost ignore the covered period. If you don't hire everybody back by December 31st, then you have to calculate the FTEs over the 24-week period.
We're getting some questions on documentation, specifically lease documentation. Our recommendation is if you don't have a formal lease, that you have some sort of memo, at least, of understanding of the arrangement. If you don't have that, we recommend that you try to obtain that. However, if you still don't have that, then I would recommend that you provide a history of your lease payment showing, from your bank records that you've been making this lease payment for years. You also should have been sending a 1099 for your lease payments to whoever your landlord is, would be another good piece of support. So that's how I would handle the documentation relating to your lease.
Another question here about other loans and other grants. This one's specifically about the town of Greece. So I'm not sure on town of Greece, but I can tell you that the city of Rochester has grant applications. So some cities and municipalities are offering those. The big ones, though, are going to come from the federal government. Mostly on the PPP, they're going to offer the payroll tax deferrals. They're offering, obviously the EIDL program was huge. So a lot of people, those are loans. Those are not always grants, except for the 10 grand on EIDL. payroll tax deferral. You know, the other big things that you'd want to look for outside of the PPP that we've been really kind of tackling right now are CARES Act related tax changes. So if you haven't already sent us stuff or you haven't talked to your CPA about that, the real money outside of the PPP is in tax changes. And depending on your situation, you might be able to get a significant amount of money back. We've helped a lot of clients get a lot of money back. So I'd be looking there first. And if you haven't already talked to us, we've been doing a review of every client. But if you haven't already talked to us, reach out to us and we can review. Even if you're not a client, we can review your return to see if there's any tax changes.
Question here, what would you do if you run out of money prior to the end of your covered period? Do you deposit more money to this account you've set up for the PPP and keep making payments out of this account until the covered period's over? No, I wouldn't do that. I would say if you spend all of your PPP money and you've calculated that it all will be forgiven, then you should apply for forgiveness at that point in time and be done. If you have, your payroll and normal business will continue out of your operating account, I would then just switch over to your operating account and handle things how you normally would. But the key there is make sure that you're applying and obtaining forgiveness. So we haven't seen anything that says there's any sort of look back period. You all obviously can always be looked at, but once your forgiveness is approved and buttoned up and done, then you're back to business as usual, and you have to make business decisions like we've been talking about as far as maintaining employees and how you spend your dollars and investing in the company and all those things. And you really don't need the PPP rules to dictate how you run your business at that point.
All right, we got another one here. Employer contribution to HSA, is that a payroll cost? Our interpretation is no. So HSA payroll costs right now are not included based on all the guidance that we reviewed, received, and received feedback from the agencies. So no.
Some questions on EIDL. So, can we apply for it after 8 weeks or our forgiveness is done? Unfortunately, unless you're an agricultural business, the EIDL program is done more or less for any business other than agricultural. So unfortunately, there wouldn't be an opportunity to apply in that case.
All right, question from Anonymous. Are federal unemployment and employer Social Security and Medicare taxes part of payroll costs? The answer to that is also no.
Well, the application changed. Joe Morelli said it would yesterday. Well, if he said it, it must be changing. My guess is it's going to have to change because the application that exists right now is based on 8-week period, and it's based on 75% payroll and 25% non-payroll. And it's just another case of the government kind of issuing something, prematurely, now having to change it all again. So my guess is it's going to change.
All right, another question. Should we accept the EIDL? It's a great individual question. And I would highly suggest, that we've gone through this a lot with clients. That's based on your individual facts and circumstances. Definitely reach out to us, though. We've got a lot of analysis. We've got a whole team that can help you with that. And we can kind of go through your situation.
We have some questions here, about the Main Street Loan Program. We're still waiting on more guidance there, and actually Brian Jocko will be teaming up with him and providing more information on those loans, but it's been kind of silent since they launched the program. And really, I would start with the banks as well, because those loans will be administered through the bank.
All right, so then we've got another one here on owner compensation. Found it a little confusing about owner compensation. Is that considered part of payroll? So yes, it is, but there are specific nuances to the rules on owner compensation. So remember, any normal employee that's not an owner can receive up to $15,385 under the old rules. We're still waiting to see if that becomes $46,000. But regardless, if you're an owner, though, you have to look at what you made in 2019 so that you're not taking more than you did in 2019. So we fully expect that there's going to be nuances to owners that you have to consider when you're filling out the application. And that applies to sole proprietors, that applies to general partners, that applies to S Corp owner employees. So there are nuances to the owner compensation rules.
A question on audits, will there still be audits for loan amounts that are over $2 million? I would say yes. I wouldn't say it'd be every company, but they haven't amended that. You know, they came out and said anyone over $2 million is subject to audit. My guess is, again, it won't be everyone, but that still exists.
All right, so as we're going through, I mean, again, you know, thank you everybody for some of these questions. We'll keep going through these. I think, you know, we keep bringing these questions. We're going to keep having these webinars every week. We've kind of committed to keeping them to about half an hour to get everybody on with their day. But the important part here is, at the end of the day, everything's getting easier to spend the money, spend the loan amounts. The next challenging thing will be the loan application. So it's important that, you know, you report everything. You still have to give all the documents. You still have to provide all the support. You still have to provide the certifications in order to get this forgiven. And while, yes, they are going to target companies with loan amounts over $2 million for audit, they're guaranteeing them. That does not mean that you're guaranteed not to get audited. So it's very important that you fill out the application correctly, because one thing is, like, you know, if Social Security and Medicare taxes are part of payroll. No, they're not. You probably spent enough payroll. So it's just important to show on the payroll reports the amounts you spent and get it right. And then, you know, you'll get everything hopefully forgiven. So keep the questions coming. We'll try to answer as many of these after we sign off as possible. But thank you everybody for joining the Hustle Firm Presents the Stay Strong webinar series. We're going to keep this going 3 more weeks, unless they just say everyone gets free money, then we're kind of out of a job. But until then, we appreciate everyone hustling with us. And as we always kind of end, I'll let John end it on this one.
Stay strong. Another special thanks to Luigi Capello for this photo, for not charging us to use his image. We really appreciate that. And yeah, we're excited to continue this, and it's been a lot of fun. And there's a lot of benefit here for small business owners that has just been great. It's great to see all the support for the small business owners that really drive things. So have a great afternoon.